Yes, it's a great time we meet again for this session. So this is CPA Choi. So remember that now, students, you are heading towards doing your exams. I wish you the best and advise you that this is now the time you are supposed to focus more on the areas you see right now they are supposed to be tested. So I gave out my predictions on the previous video I did. So I think you watched that one. So today I would like to look at how the banks prepare their relevant books of accounts. And this is all about a topic tested in advanced financial reporting and analysis. So other than the advanced financial reporting and analysis, I know that maybe this is a topic again which can be of value in the practical world. So that even if you are an accountant, you will be able to understand how does the banking sector, how does the banks prepare their relevant books, and which are the relevant books prepared by the banking institutions. But for the CPA students, this is a topic which can be tested in your exam. Even if yes, it was there as sitting, you never know. They can repeat. So I have said that this is a topic in the advanced financial reporting and analysis. Before the change of the syllabus, it was in financial reporting and analysis, that is under the intermediate level. But now it's under the advanced financial reporting and analysis. So to look at this topic, I would like to do that question which was tested last sitting, that is April 2022, from that KASNEB past paper. So April 2022. So April 2022. April 2020, that is AFR, Advanced Financial Reporting and Analysis. Advanced Financial Reporting and Analysis. So, April 2022, this question was question 4. So, this is our question 4. So, when we are talking about financial statements of banks, so like now here we were having a bank called Belta Bank. A bank called Belta Bank Limited. So banks are supposed to prepare income statements. They're supposed to prepare income statements. And they're supposed to prepare statements of financial positions. Statements of financial positions. Statements of financial positions. So when talking about income statement, so your income statement will be divided into 4 areas. Your income statement will be divided into 4 areas. So we have items which are supposed to be classified as interest incomes. We have non-interest incomes. We have non-interest incomes. We have interest expense. We have interest expenses. And we have non-interest expenses. That is non-interest expenses. So the non-interest expenses. So which are some of the interest incomes? Remember that let's say, for example, today, the bank, for example, now Belta Bank extends loans and advances to customers. So if Belta Bank advances loans to customers, so once it extends loans to the customers, remember that on this scenario, it will be receiving interest from those loans it extended to the customers. So that is an interest income. So we have placement to other banks. So today, if let's say, like now Belta Bank was lending some money to KCB Bank. KCB Bank. So that is what we call placement to. Placement to. Placement to KCB. So on this placement to KCB, Belta Bank will be receiving the money plus the interest. So the interest which Belta Bank will be receiving based on the placement to KCB, that is an interest income to Belta Bank. That is an interest income to Belta Bank. So we have deposits to other banks. So if today Belta Bank did a deposit to KCB Bank, this, let's say it was there was money it was giving out as a deposit to KCB Bank. Then KCB pays that money back to Belta Bank plus interest. So remember that that is an interest income to Belta Bank. So non-interest incomes. So I have given out some examples of interest incomes. So what about non-interest incomes? Non-interest incomes. So this is all about incomes which does not accrue interest. So the normal incomes, it doesn't have any interest on them. So we have fees and commission income, foreign exchange income. So they don't have the aspect of interest on them. So we have interest expenses. For example, today, if customers deposit money with Belta Bank, remember that customer deposits are liability to the bank. So the customer deposits are liabilities. So if the customer deposited in the savings account today, or after some time, now when the customer will take in his money from the savings account, so the bank must pay plus a certain interest. And the bank must pay plus some interest. So this is an interest expense to the bank. This is an interest expense to the bank. So if there was some placement from other banks, let's say for example, KCB deposited some money, or it did a placement to Belta Bank. So this is all about placement from other banks. So Belta will be paying back that money plus interest. So that is interest expenses. So those are the interest. Expenses. Because now Belta Bank would pay that money because it was like a lending it received from other banks. I've given an example of KCB lending some money to Belta Bank. So Belta Bank would pay that money plus interest. So that is an interest expense. Then we have non-interest expenses like fees and commission expense. We have administrative expense. So now the normal expenses, which does not attract any interest. So let's look at this question of receipting. So that we analyze those items which were provided, so that we'll be able to know what does they concern, or what they mean before we apply in our relevant statements. That is the income statement and statement of financial position. So like now, before I go to that question, a minute. So the next statement I mentioned is all about the statement of financial position. So statement of financial position, it will be divided into three areas. So we'll be having assets, we'll be having equity, and we'll be talking about liabilities. So under banks, under the banking institutions, we don't talk about, so if it's assets, we don't classify short-term and long-term assets. We just mention if it's assets, we say assets. We list all of them, no matter non-current or current. If it's all about liabilities, we just say liabilities. We list all of them. We don't say non-current or current liabilities. So then they will be part of the equity. There will be a part whereby we have to mention equity. So right now, this question of receipting 2022, they were saying that the following information was extracted from the financial records of Belta Bank Limited as at 31st March 2022. We have cash and balances with Central Bank, so that is an asset. Money on demand and short-term deposits, that is an asset. Deposit with other commercial banks, that is an asset to Belta Bank because it will be receiving that money back. Deposits from other commercial banks, that is a liability to Belta Bank because Belta Bank will pay. It is not the money for Belta because that is a deposit from other commercial banks. Then we have investment in government securities, that is an asset. Investment in equity instruments, asset. Property, plant and equipment, that is an asset. Intangible assets, those are assets. Loans and advances to customers. So loans and advances to customers to Belta Bank, that is money for Belta Bank. So it will be expecting to receive that money. That is an asset. So customer deposits, so that is a liability because now those are monies for the customers. It's not money for Belta Bank. So Belta Bank would have to pay. So that is a liability. Long-term borrowings, liabilities. Other receivables, those are assets. Other payables, those are liabilities. Installment tax paid, that is a tax paid in advance. So meaning that it will reduce the tax which is supposed to be paid in the current year. That is March 2022. So the tax I will be paying this year, it will be reduced by that installment tax paid. Deferred tax as at 1st April 2021. So again, that is all about, it will assist me to determine the relevant tax. So remember that the deferred tax is just provisions for future taxes. So interest on loans and advances to customers. So that is an interest income because this is money they were receiving back based on the loans and advances they extended to the customers. So the customers will be paying interest on those money the Belta Bank extended. Interest on government securities. So that is interest income. Interest on deposit with other banks. So interest income. Interest on deposits from other banks. So this Belta Bank will be paying based on the money they received from other banks. Then we have interest on customer deposits. Interest on customer deposits. Belta Bank would have to pay customers some interest based on their deposits. Then we have interest on long-term borrowings. Interest on long-term borrowings. So interest on long-term borrowings, remember that that is an interest expense because Belta Bank would have to pay based on the borrowings it received. So it would have to pay interest. Administrative expenses, yes, these are expenses, but they don't have any interest. So they are non-interest expenses. We have other operating expenses, non-interest expenses. Fees, commission, and foreign exchange income. This is an interest income. This is an interest income. Yes, it's an income which does not accrue any interest. Ordinary share capital, this is an equity component. Share premium is an equity component. Deposit protection reserve, an equity component. Retained earnings, equity component. Suspense account. So that one will not be recorded anywhere because a suspense account is whereby you record the items where you are not sure of where they were supposed to be recorded. So additional information, on 1st April 2021, Belta Bank Limited issued for 50 million, 5-year 8% coupon bond at par. The bond would be redeemable at a substantial premium, which gives it an effective interest rate of 12% per annum. There were no interest payment, there were no issue costs, there were no issue costs. The only accounting entries made were to record the cash proceeds from the issue and annual interest payment on 31st March 2022. So there was a 5-year 8% coupon bond. So remember that the bank was in need of raising some money. So what it did is raised a bond. So for 50 million bond. So the interest it will be paying when the owners of the bond redeem their money is at 12%, because that is the effective. That is, the bond will be redeemable at a substantial premium, which gives it an effective interest rate of 12% per annum, even if its contractual rate was 8%. Even if its contractual rate was 8%. So we'll have to look at how do we determine the interest on that bond and the relevant, because that is an interest expense on the bond, because the bank would have to pay to the owners of this money, because right now the bank was borrowing by raising a bond. So the bank would have to pay for 50 plus some interest. So we have to go to do our working to determine how much of the interest is paid and what is the value of the bond it was supposed to be at the end, so that that value of the bond will be recorded as a liability. Number 2, as at 31st March 2022, the directors of Belta Bank accepted a valuation report by a professional valuer, which revealed the fair value of the property, plant and equipment to be 2,500. The carrying amount of the property, plant and equipment amounted to 1,850. The directors do not wish to make inter-reserve transfer, a bond revaluation. However, they do account for deferred tax. So they do account for deferred tax on revaluation of property, plant and equipment. Revaluation is said to be accounted for in the books of their bank. Number 3, during the year ended 31st March 2022, the current tax on profit was estimated at 890. As at 1st March 2022, the carrying amounts of the net assets exceeded the tax base by 1,800. These carrying amounts do not include the effect of the revaluation in Note 2 above. So income tax rate applicable to Belta Bank Limited is 30%. So they need a statement of profit or loss and a statement of financial position. So the statement of profit and loss and the statement of financial position. So when we talk about this statement of profit and loss, remember that you have to understand on the aspect of classification of these items based on interest income, interest expense, non-interest income, non-interest expense. So once you understand that, from this question it will be very easier for you. So let us do the presentation. So we have Belta Bank. So Belta Bank Limited, statement of profit and loss. So we have the statement of a profit and loss, statement of profit and loss, and other comprehensive incomes, and other comprehensive incomes, and other comprehensive incomes. So that is for the year. For the year ended 31st March 2022. So 31st March 2022. So 31st March 2022. So here we have shillings and here we have shillings. So we have shillings and we have shillings. So on this scenario, on this case, remember that we start from interest incomes. We start from interest incomes. So we start from interest incomes. So the interest incomes, I can see on my question, is all about interest on loans and advances to customers, interest on loans and advances to customers, interest on loans and advances to customers. So the interest on loans and advances to customers, that is 2575. 2575. Then we have interest on government securities. Interest on government securities. Interest on government securities. So the interest on government securities, interest on government securities, that is 2264. That is 2264. Then we have interest on deposits with other banks. Interest on deposits with other banks. Interest on deposits with other banks. With other banks. With other banks. So the interest on deposits with other banks, so that is 662. So those are the three interest incomes I can see. So we'll come to get the total there. So we go to the non-interest incomes, non-interest incomes, non-interest. So before we talk about non-interest incomes, I have to talk about interest expenses. I have to raise interest expenses. I have to raise the interest expenses. So let's raise interest expenses. Interest expenses. So interest expenses. So the one I can see here, the interest expenses, we have interest on deposits from other banks. Interest on deposits. Interest on deposits. interest on deposits from other banks. From other banks. From other banks. So interest on deposits from other banks is all about so this is the one which is 662. So this one was 646. This is 646. The interest on deposits with other banks was 646. So this is the one which is 662. Then we have interest on customer deposits. Interest on customer deposits. Interest on customer deposits. Interest on customer deposits. So the interest on customer deposits, that is 18. We have 1833. We have 1833. And then after interest on customer deposits, we have interest on long-term borrowings. 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 So the interest on long-term borrowings, that is 1385. 1385. 1385. So we need to get those totals. We need to get those totals. We need to get those totals. Before I check on the additional information, because there was a bond, so interest on bond, interest on a bond, remember that they were supposed to raise money. So when they were trying to raise some money, through the issue of a bond, remember that when the customers or the owners of this bond will be redeeming the bond, they will redeem this bond plus an interest. So the bank will have to pay that relevant interest. At what percentage? So they said that it was an 8% coupon bond, but now it would be redeemable at 12%. So they would have to pay that bond at 12%. So 12% of 450. So 12% of 450. Let's get the totals. So 2575 plus 2264 plus 646. So this is 5485. Then 0.12 times 450. So this is 54. So plus what? 662 plus 1833 plus 1385. So this is 3934. So 3934, if you minus from 5485, minus the answer. So that is 1551. Net interest income. Net interest income. So that is the net interest income. So the next thing we have to talk about is what about now the interest. So non-interest incomes. So let's add non-interest incomes. Non-interest incomes. So the non-interest incomes. So the non-interest incomes I can see in my question here, there was fees, commission, and foreign exchange income. Fees, commission, it is fees, commission, and foreign exchange income. And foreign exchange income. And foreign exchange income. So from my question is 6090. 6090. So if we add 6090, we get the total income. So that was the only non-interest incomes. So we have the total income, so that we raise interest. So that is non-interest expenses. We raise the non-interest expenses. Non-interest expenses. So the non-interest expenses. So the non-interest expenses, I can see we have administrative expenses. We have administrative expenses. We have the administrative expenses. So the administrative expenses from my question is 2160. 2160. And we have other operating expenses. We have other operating expenses. So we have other operating expenses. of 1163 of 1163 of 1163. So if I take that 2160 plus 1163, so this one will be, that one will be 3323. So 3323 I minus. So if I take 1551, if I take 1551 plus 6090, so that is 7641, then minus 3323, so that is 4318. So that we have what we call the profit before tax. Profit before tax. So I would have to minus income tax. I would have to minus the income tax so that they get the profit after tax. So income tax is equals to what? Current tax, so the tax which is supposed to be paid in the financial year under consideration plus minus increase or decrease in deferred tax, increase or decrease in deferred tax, increase or decrease in deferred tax, plus tax under provision, plus tax under provision, you minus tax over provision, you minus tax over provision. So when we talk about current tax, that one was provided in the additional information being 890. So for the deferred tax, we always say that it's equals to the temporal difference. You take your temporal differences times tax rate, times the tax rate, of which we have types of temporal difference, whereby we have taxable temporal difference and we have the deductible. So for the taxable is when the carrying amount is greater than tax base. And this one is when the carrying amount is less than, so carrying amount is less than tax base. So on this question, remember that in the additional information number 3, you were told that during the year ended 31st March 2022, current tax on the profit was estimated 890. That is the one we recorded there. As at 31st March 2022, you were told that the carrying amount of the net assets exceeded their tax base. Carrying amount exceeding their tax base, it means that that is a taxable temporal difference provided there. So once we have one type of temporal difference, right now we have a taxable temporal difference as at 31st March 2022 of 1800. So if you take that 1800, you multiply with the tax rate of 30%. Because our tax rate was 30%, I would be able to arrive at the deferred tax as at the relevant date, which is 540. So for me to know that if it's an increase or a decrease, I will compare with the deferred tax as at 1st April 2021, which is provided in the financial records, which are provided there. So in the financial records, we were having 370. So meaning that this is the deferred tax at the start of the year, and this one is at the end of the year, meaning that there was an increase on the deferred tax of 170. So that is what we are supposed to add here, so that we get 1060. So there was no under provision or over provision in this question. So for you to have a tax under provision, remember that this is a tax which was underpaid in the previous year. The tax which was underpaid in the previous year. Over provision is the tax which is overpaid in the previous year. So if it's an overpayment, it reduces the tax of the current year. If it's an underpayment in the previous year, it will increase the tax of the current year. So meaning that if I take 1060, I deduct, I will be able to get a profit after tax of a certain figure. So let us pick our calculator so that we check. So 4318 minus 1060. So minus 1060, that is 3258. That is the relevant 3258. So that was tax. That was tax. So the next thing to do is all about, we need to add here other comprehensive incomes, because I can check on the additional information. I can see that there was a revaluation. So add other comprehensive incomes. Add other comprehensive incomes. Add other comprehensive incomes. So other comprehensive incomes, there was that revaluation. There was that revaluation gain. So because they said in the additional information number 2, as at 31st March 2022, the directors of Pelter Bank Limited accepted a valuation report by a professional valuer, which revealed the fair value of the property, plant and equipment to be 2,500. The carrying amount of the property, plant and equipment amounted to 1850. So remember that the revaluation is the difference between the market value of that relevant asset and its carrying amount. So you are told that it was valued at 2,500, but the carrying amount was 1850. So the difference is what gives us revaluation. So 2,500 minus 18, 2,500 minus 1,800. So that is it was 1850 or 1,800. So the carrying amount was 1,850. So 2,500, which is the valued amount, 2,500, which is the valued amount, minus 1,850. That is what gives us a revaluation gain of 650. So, but now they said these 650 is subjected to a deferred tax. That is what they said in that additional information, that revaluation. They say that, however, they do not account for, they do account for deferred tax on revaluation. They do account. So meaning that I have to deduct that deferred tax on 650. So I take 30% times 650. So 30% of 650. So times 0.3. That is not 195. So 650 minus 195. The deferred tax on that is 195. So 650 minus answer. So this one gives me 455. So 455 is supposed to record here, so that my total comprehensive income will be, so if I take 3258 plus the answer, 3258 plus the answer, that is 3713. So that is the total comprehensive incomes. So now let's do the second part of that question. That is the statement of financial position. So we have Belter Bank. Statement of financial position. So statement of financial position. So the statement of financial position as at. So our financial year was ending on 31st March 2022. 31st March 2022. So we have one column there. So when we talk about statement of financial position, if it's all about the assets, so the assets are just listed, all of them, no matter current or non-current assets. So in banking, we don't have to say non-current assets, current assets. So we just list all the assets. So that is what I will be doing from our question as analyzed earlier. So the first asset is all about cash and balances with central bank, cash and balances with central bank, cash and balances with central bank. So that is 4046. We have money on demand. We have money on demand. And short-term deposits and short-term deposits and short-term deposits and short-term deposits. That is 2150. Deposits with other commercial banks. So remember that if Belter Bank deposited with other commercial banks, it would be expecting to receive that money back. So that is an asset to Belta Bank. So deposit with other commercial banks. With other commercial banks. So this is the money Belta Bank will be receiving in return. So deposits with other commercial banks. So we have 4,600. The deposits from other commercial banks, it means that is money which Belta Bank received from other commercial banks. So that one means that Belta Bank will be paying that money back. So that is a liability to Belta Bank, not an asset. So we have investment in government securities. We have investment in government securities. Investment in government securities. Investment in government securities. So investment in government securities, that is 4485. That is 4485. Investment in equity instruments. So investment in equity. Investment in equity instruments. So investment in equity instruments. So investment in equity instruments, that is 765. Then we have property. We have property, plant and equipment, property, plant and equipment. So for the property, plant and equipment, it was having a figure of 7416, but you have to add the 650, the one which was due to revaluation, according to additional information number 3. That is according to additional information number 2. Sorry. According to additional information number 2, the difference between the valued amount and the carrying amount. So I think you can see that one from additional information number 2. 2500 minus 1850. So the difference between the carrying amount and the revalued amount on the same asset. Then after the property, plants and equipment, we have to talk about intangible assets. There was intangible assets. So for the intangible assets, we have 4986. We have 4986. Then loans and advances. So loans and advances to customers. Loans and advances to customers. Loans and advances to customers. So loans and advances to customers, that is 8144. Loans and advances to customers. So remember that this is money which Belta Bank advanced to customers as loans. So that is the money for Belta Bank, which is an asset to Belta Bank. So but for the customer deposits, that is a liability to Belta Bank. Long-term borrowings, that is a liability. Other receivables, that is an asset. Other receivables, that is an asset. So these are debtors' balances. Again, this is money you are claiming to receive from your debtors. So we have 2493. We have the 2493. So I think up to that point, I will be able to get my total assets. My total assets. So after the total assets, we have to talk about equity and liabilities. So equity and liabilities. So for the equities and liabilities, we have ordinary share capital. So let's start with equity. So ordinary share capital. So ordinary share capital, this is 4,400. We have 4,400. Then we have share premium. We have share premium. We have the share premium. So the share premium is 2,500. The share premium is 2,500. We have deposit. Deposit protection. We have deposit protection. Reserve. Deposit protection reserve. So the deposit protection reserve, that is 5,000. That is 5,000. Then we have the retained earnings. We have the retained earnings. Remember that the retained earnings as at the start of the year, that is 1st April 2021, is all about 3623. So we have to add the profit for the year. the one we got from the income statement we did. So when we did the income statement, the profit for the year was 32.58. So 32.58. Then after this, there was a revaluation reserve. The one from the additional information, but after deducting the deferred tax on revaluation. Remember, we got 650 yes as a revaluation, but we deducted 30% of that 650 from the 650 itself. So 30% of 650 being the deferred tax on that revaluation. So we arrived at 455. The next thing is all about, now we go to the liabilities. So let's list all the liabilities. So the liabilities we have here is all about, from the question there was deposits from other commercial banks. 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 So deposits from other commercial banks, that is 23.24. 33.24. So that is money which was deposited in Belta Bank from other commercial banks. So Belta Bank would have to pay. So that is a liability to Belta Bank. Then we have customer deposits. We have the customer deposits. So remember that today if you deposit money in a certain bank, you can withdraw any time. So that is your money. That is not the funds for the bank. That is why to the bank, customer deposits is a liability. So we have 70.65. We have the 70.65. 70.65. Then after that we have long-term borrowings. Long-term borrowings. We have the long-term borrowings. So the long-term borrowings, 56.60. Of the long-term borrowings, there was other payables. So other payables being 27.17. And then after that, there's a deferred tax. So remember that the deferred tax, we have two deferred taxes. So the one, as at the end of the year, as per the additional information, remember that we were given a taxable temporal difference. By the end of the year, we were provided with a taxable temporal difference, whereby we took that taxable temporal difference of 1,800. We multiplied with a tax rate of 30%, and we got 540 as the deferred tax at the end of the year. So there was 540 plus the 195 being the deferred tax on revaluation. 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 Then after that, another liability here, there was current tax payable. Current tax payable. Remember that in the additional information, again, there was a current tax of 890. But already there was a 360 as an installment tax which had been paid. There was an installment tax of 360 which we need to deduct from the 890. So after we have done this, the other thing I would like to do a working on is all about concerning the 8% bond as per the additional information number 1, so that I know the value of the bond to record. The value of the bond to record here as a liability. Remember that a bond is a liability to Belta Bank because there is the bond, there is the money through bond, whereby it's all about, it's like they were borrowing internally from the public or from its customers by giving them, by raising a bond, that is. So this is the money which a Belta bank will have to pay inclusive of an interest. So which interest? It appeared in the income statement. So what is the value of the bond which Belta bank paid at the end? So let's do that working. So I can do that working here. So I will be looking for the value of the bond. So looking at the additional information number 1, so the opening liability, that is as at 1st April 2021. So they were trying to raise 450 million through a bond. So we need to add, remember that when this Belta bank will be paying this 450, it will pay back this money it borrowed through a bond with an effective interest at 12%. So 12% of 450. Then we raise the coupon rate of the bond, the 8%. The 8%. So let's use our calculator to get these figures. So 12% of 450, 0.12 times 450. That is 54. That is 54. And 8% of 450, that is 36. So if I do that, so 450 plus 54 minus 36, so that is 468. So this is what I will record here as a liability. It was an 8% bond, which was supposed to be redeemed at 12%. Remember that 54 I recorded under the income statement as interest expense. So that is 468. So up to that point we have total equity and liabilities. Total equity and liabilities. So if I take 890 minus 360, that is 530. So 530, 540 plus 195, this is 735, 36, 23 plus 32, 58. So this is 6881. So let me get the total of the equities and liabilities. 4400 plus 2500 plus 5000 plus 6881 plus 455 plus 3324 plus 70 65 plus 5660 plus 2717 plus 735 plus 530 plus 468. So I'm getting 39,375. 39, that is 39,735. 39,735. That is 39,735. So that is the relevant figure. Then we have to do this part of assets. So the assets. So I have to add the property, plant and equipment. So 7416 plus 650, the revaluation. So this is 8066, 8066. So 40, remember that this one was just a working. So never worry about it. So let me add the other items. So 4046 plus 2150 plus 4600 plus 4485 plus 765 plus 8066 plus 4986 plus 8144 plus 2493. So this is 39 735. 735. So that is how you are supposed to prepare these statements, because now you can see our answers are just the same. They are just the same. So that is how you are supposed to prepare these. So I can see that as you continue preparing for your exam, I wish you all the best. Try to do your best. Right now in advanced financial reporting, try to do your best in all the areas, with more emphasis on the first 4 major topics. That is group accounting, cash flow, statements, earnings per share, and reconstruction. With other topics like now these ones, the banking sector, insurance, and the others like segment or share-based. So those are very easy. When they come to in an exam, you are supposed to score them 100%, because they will be like a booster for you to pass. So this is now the new journey and the new way. From next semester, we'll be doing our exams. We'll be doing, our online teaching. So our online coaching. So this is the new way I will be doing it. So for the guys who will be moving from the intermediate level, whoever who is watching this video may be in the intermediate level. For the guys who are friends who will be doing the advanced level, you can be able to refer them to this platform. So it's a new journey. At the same time, we are trying to make it more better, so that I deliver the content at a high notch and in a very effective and efficient manner. So I would like to say that thank you for watching this video. Subscribe to the YouTube channel, share this video to your friends, and at the same time revise well, so that you finish CPA. Thank you for your time.